friends, this is Martin from CK, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the markets today and how we can plan for a better trade tomorrow. So what was the action in the markets today? The market slides down to a support zone, and tomorrow we have an expiry. Probably a volatile expiry because of the Fed event meeting that's going to come out today. So let's look at details. As usual, we'll be looking at the pre-market analysis for December 16th, Thursday 2021 tomorrow, based on all of these parameters that you see on the left side. Right, we'll be looking at the charts for each of this, and then we would have some additional data analysis based on all these parameters that you see on the right side. Let's deep dive into that. So what is the candlestick pattern here? This is clearly bearish, wide range bearish, and on the Bank Nifty also you have a bearish candle, right, but a small body, right? So 103 points lost today, but it took a supportive gap, the same gap that we had been talking about for the last several days. When the Nifty shot up here, we had a gap formed. It's still there. The same here. When the Bank Nifty shot up here, we have a gap here. It's still there. So Bank Nifty 104 points lost, right? That was still the support. Intraday it was moving up and down. See the choppiness. Moved up, down, up, doubly shaped. 15 minutes candle. Look at Bank Nifty. So much more choppy. Went up, down. Look at the candle size. 5 times went up and down within 300 point range. The other one is within 150 point range. Choppiness, highly volatile. But the range is very small, it is flat. Look at the Bollinger Bands. Right? What does that say? It says that there is a contraction of the volatility that's happening. Look at the bit this slowly reducing, and the bands are coming closer, but still it's high, and that's why I have the sharpness. Moving average resistance is what you can clearly see. It has taken the resistance there last 2 days and then fallen down, taking the gaps up. So this shows that there is some consolidation hours for coming weeks or days. This is still on the moving average of the bands, and Bank Nifty also volatility is squeezing, and then contraction is happening, and then consolidation is what ahead is what the charts are indicating. Support resistances, like let's see what does it say. 7200 is where it took support here today. That goes and you have 7,000 levels back, and then if that falls, we go back to the gap support of 16,700 upside, 17,350, 400 where we have a resistance first, and then 17,500, 600 we have. About that, it's different levels. You don't need to worry about that. Bank Nifty, look at that, 37,000. Oh no, that band is where it has taken the resistance. Upside for the resistance can be seen at 37,300, 400 range, and above that you have 37,700, 800 range. Below 36,600, 36,700, that's on would be good support, and after that you have 35,900, that's 36,000 is going to be good support down there. That's the Bank Nifty support resistance levels. Nifty we had already seen. Bollinger we had already seen. Momentum divergence, no divergences. Momentum remains sideways for the Nifty and the Bank Nifty both. Trend ADX indicator shows that the crossover has happened on the Nifty to the bearish zones in the short. Bank Nifty continue to maintain the DMI positive zone, so trend is not that much weak in Bank Nifty. So the chart shows median term more than negative. DMI negative is dominant, right? So that's what ADX trend indicator tells. India VIX further moved up 1.5%, closed at 17.2, and IB implied volatility 70.64, and IBP shot up to 56.5. So one of the recent highs you can see. So IBP shooting up, IB again moving up towards the 20 levels after it had hit near the 16 levels, and it's well within the range, right? But choppiness is something that we continue to see since last several days. Open data showing that 17,000 and 17,200 both have good put writing. 7,500 and 600 has got good call writing. So that's where the action tomorrow expiry is going to happen. 0.51 is neither bearish nor bullish, you can see. Short build up is what you see in the futures open interest data. Bank Nifty 36,500 and 37,000. Right? That's where the maximum put rating is there. Support will be there. And 37,000, 37,500 is where you could find resistance. The upside 0.68 is not that bullish. Not that bullish, you can say, right? Short bill of again, you see the futures data, open interest. Look at the red all over. All big weights in the Nifty 50 are all red, except two of them, LIC and LNT. Right? So that's a red day. IT down 1%, metal 1% down, auto 1%, 0.5% up. Probably the only sector that's up. From 0.5% down, energy down, 0.5%, 2% reality down. So overall, it's majority. It's no clear direction. Almost all of them are 1% or less than that down, or no, it's flat for auto, except all. There's no clear direction. It's sideways movement that's seen. No sector is showing any strength or weakness. Since the momentum also is in the sideways, we just can't pick up anything for the long. Right? Sector wise, no, you can't filter it out. Institutional participation, so look at this, 3,400 crores of selling. That makes 23,148 crores of selling only in December. Right? We hardly half this December, half the month is left. Probably by the end of December, the selling should stop if they go for vacation before that, right? Otherwise, there's no stop, non-stop selling. Days, fortunately, mutual funds are buying 1,500 again today also, and 17,000 crores of buying has happened from the DIs, but institutional selling like this is worrisome. Dollar is consolidating, and after it has broken out from a major resistance level. But the thing interesting here is that the rupee is shooting up like anything. It's heading towards the 77 dollars. 76.5 is what you see here on the screen. 0.35. So that means rupee is weakened so much, and probably this may be ahead of the Fed meeting, right? And could drop. There could be some play that can be done on the USD INR futures or on the options. If there is a volatility crash, that's going to happen after tomorrow's event, right? On the options, especially. Crude oil is short down today, back to the 69 kind of levels, which is good for gold. Is consolidating the same place where it had been doing it for several days now. Neither does it want to go down, nor does it want to go up. US market was down yesterday also, right? Obviously today night 1:30 is where, overnight 1:30 is where the Fed meeting is going to come out. So this indecisiveness, the figures that you see here, nothing can be made out from any of this, but the markets will react to the decision, whichever way that it takes it, right? So we'll have to look at this tomorrow before the pre-market, right? Then we'll understand better. This doesn't make any sense as of now, the global markets like US and the UK. Actionable one item, Bajaj Auto, seems to be weak, resisting at the RSI 40 and also resisting in the price on the moving average. It makes it bearish, right? Momentum is lost, trend is lost, volumes are less, and it is falling. So it may have more. Look at the support and the resistances. It's not an intraday play. It can be a swing play, and you have to make a note of the support resistances previous what is there, and then have the stops there. Be careful with that zones, right? There are support resistances there before when you play on this. Now the wrap up is a mild bearishness, just like I suggested. Today also my view remains to be mild bearish because of the chart patterns, what it shows, the support resistance levels, what it shows, and the bearish momentum crossover on the Nifty continues to be there, the weak trend, and of course institutional selling like mad. Now indices fail to break out the lower high. It's very clear that it's resting at the moment of the moving average and then sliding down, right? So there's no other view that can be taken. The Bollinger Bands is on a medium term, it's giving a hope that it may be consolidating and not crashing. Right? SPIX has cooled off earlier, but it is now again spiking up back. Right? So let us see whether 17,000 and 17,200 is going to be the support for tomorrow, expiry, or probably would it. See, anything can happen tomorrow because because it's a big event there. So play safe and use hedge positions, or if you are already if you are playing that, hope you have taken the hedge positions already. If you have positions taken early, if you're not taken, then always use hedge positions instead of naked positions on options. If you're playing, volatility is very high and direct playing is difficult. You should understand support and resistance very much. And also the candlestick patterns that indicate reversals, that has to be clear. So that's a wrap up of my view. Hope this will help you to form your own view and your own trade plan for tomorrow. If that helps you in any way, consider hitting the like button and then share to friends and colleagues. Thanks for watching. Happy trading, happy learning. Bye.